I welcome you one more time to today's conversation in taxation, being the first, unit that we have talked about from the introduction that I did give you last time. I had time to, introduce these key concepts to you. Okay, but what is it that we need to discuss in this conversation? Won't just give you the general scope and the purpose of taxation. Okay, the main classifications of taxes, to explain to you the case laws and the tax legislation in the country. To contextualize, we will look at the indigenous country. We will have to look at the importance of the charge year and why do we need taxation to the economy. What do you understand by taxation? Taxation may be defined and will be defined in this case as the means by which a government raises revenue by levying or charging income and gains for people and businesses resident in that particular country, right? So the means, the ways by which the government raises revenue by charging income and gains for people and businesses that reside in the given country. That is what taxation is. So a tax itself can just be, let's say, a compulsory contribution to the state, right? To the state revenue, that compulsory contribution. It is actually levied or charged by the government on workers' income, on business profits, among others. Now, each country has got a tax system. So my question is, what could be the better tax system or a good tax system? How does it look? A good tax system should not be so high as to make production expensive. The taxes should be easy and cheap to collect if it's a good tax system. It should not be very difficult to collect taxes and charge people. These same taxes should be certain and the tax rules easy to understand by our citizens. And the taxes should be levied on the basis of ability to pay with equity, not just anyhow. We have to make sure that people pay according to their ability. And taxes actually should be efficient to collect. That's if the system is efficient. I encourage you to pay particular attention to what I'm talking about. This is just because this is just, we're giving you the concepts, the underlying concepts that will help you when we start quantifying or when I bring in the question and we start solving, because I'll be referring to these key things that I am bringing forward and putting across here. So get it clearly. Number one, why do we need taxation in a modern society? For economic factors. Number one, for economic factors. You and I may be aware that without taxation, it may be very difficult to control the economy, because taxation policies, they have been used to influence some economic factors such as employment. We use taxation to affect employment, to affect inflation, to affect investments, right? Investments as a country. You think the current government of your country is spending heavily on the education of the young people? So the question is, where do you think they are finding the money? That's taxpayers' money. It's actually our money, us who pay tax. Okay? It's about you guys who are paying tax as well. So the government will be there to employ a lot of people. Where do you think the government is finding the money to recruit? It's because of us who are paying tax. They're using our money to pay them salaries, and you will see how those people are always excited when the government gives them our money. So this is what happens. Anyways, so I'm communicating to you that we need taxation for economic factors. That's the major thing. The other reason why you need taxation is actually just for social justice. You know, the taxation system accumulates and redistributes wealth within a country. Okay, it redistributes wealth within a given country. So you can you can imagine if both, let's say, people with a load of money and those with less money were paying the same amount of tax, right? This may be perceived as unfair. Now, because of the same, you see that people pay different amounts. So we are trying to redistribute the income from the rich and take a little bit of some income to the poor. That's why even when you think of the government bursaries and government scholarships, sponsorships, they emphasize that they need to give to those who need it, like who do not really have. Now, there are different taxes that we use, okay? So because of that, those taxes, they have got different effects, social effects. For example, the progressive taxation. Progressive taxation occurs in such a way that as your income rises, then the percentage of taxation also rises. A common example of such would be pay as you earn, pay in Zambia, and the income tax in the United Kingdom. Now, the other type of tax is regressive tax. Let's examine the impact of this. With the regressive tax is that as your income rises, then the percentage of taxation paid falls. Okay. An example is of a tax on cigarettes. The tax on cigarettes is the same regardless of the level of income of the purchaser. Because of the same, as income rises, then the proportion of tax in relation to the tax paid is represented as a lower proportion of income. The other form of tax that we look at is proportional tax. With the proportional tax, as income rises, then the proportion of tax remains constant. Yeah. So the proportion of tax remains constant. The ad valorem principle, this is where a tax is calculated as a percentage of the value of the item on which it is calculated on. For example, of this kind we can give of is the value added tax, VAT. Now, there are different types of taxes that we have, and I want you to pay attention to the different types of taxes that we have. Number one, we have what we call direct taxes. Now, with direct taxes, these are usually charged directly on the income and gains of individuals and businesses. They are charged directly on the income and the gains of individuals. An example we can give is of income tax, the mineral royalty, and property transfer taxes. These are charged directly to the individuals involved in the transactions. Then we also have the indirect taxes. What happens with the indirect taxes? These taxes, they are collected via an intermediary who later passes them on to the government for at a stipulated interval. Of course, that's what happens. You see that indirect tax is not collected directly by the government, but there are just some intermediaries. There are some people in between that do the collection. So an example of such tax is value added tax. You know what happens with VAT? The consumer will pay VAT to the supplier or to those people who are selling those goods. Then the supplier will pay that VAT to the revenue authority. in the case of our context, the Zambia Revenue Authority. The capital taxes, this one, let me give an example. For example, if you have land, right? You have buildings that you want to sell. So you will have to pay some tax on capital. That is called capital tax. So these taxes on capital receipts or a capital receipt is just basically an amount of receipt that results from a disposal or a sale of capital item. So an example of such is property transfer tax. You know that when you sell a house, sell any property, you pay some tax. That's an example of capital tax. The other form of tax that we have is revenue tax. Now, these are charged on revenue receipts. When you receive some revenue, that's when you are charged. A revenue receipt is always resulting from a disposal of a non-capital item. For example, the turnover tax and the income tax. Those turnover taxes that are charged on the total turnover of a company, and the income taxes are example of revenue tax. The other classification of tax that we can give is of regressive taxes. What about regressive taxes? A regressive tax, these are taxes that represent a smaller proportion of a person's income. So as income of that person rises, then the average rate falls. So the VAT is a regressive tax because the rate of VAT is the same on the same good, whether that good is bought by the rich person or by a poor person. This is what happens. What about progressive tax? Progressive taxes, these are taxes that represent a larger proportion of the person's income. So that is to say, as the person's income rises, then the average rate of taxation rises as well. Okay, so these are some of the different types of taxes. Let me end with types of taxes, the classification, the proportional taxes. With the proportional taxes, the taxes where the percentage of income paid in taxation always stays the same. So the average rate of taxation is constant. That is regardless of the level of income. This is called proportional taxation or tax. The question that we can ask ourselves is that what could be some of the statutes or tax legislation now in the context of your country? You and I, what we should know is that the judges, when they are always approached with some of the issues regarding to the sources to taxes, they have to refer to the law or to the statutes. So now we want to look at the main statutes that governs taxes in the country, in this case, Zambia. So the main of them is the Zambia Revenue Authority Act. This is an act under which the ZRA was actually set up. The other statute that you have is the Income Tax Act that governs income tax. You also have the Value Added Tax VAT Act, which governs how VAT, should be taxed. You have the Customs and Excess Act that governs the customs and excess duties. These statutory instruments are very important. Now, you see, when you talk about the issue of the case law, you should be aware that the judges themselves, just as I said, they cannot make some tax law. But instead, they are able to decide cases in taxation, assisted with the interpretation of particular tax statutes, which relates to the specific circumstance of a case before the judge. So they go back to the books and check what happens. Now, How does tax guidance work? There's those authorities that are there to guide. For example, ZRA number one sends or issues the practice notes. What is written in the practice notes? Yeah, the practice notes, they set out how the Zambia revenue intends to apply the law. Okay, these are normally issued following the amendments to tax legislation. Then the extra statutes of concessions are produced. These, they set out circumstances in which, in which we will not apply the strict letter of the law where it would be unfair or to do so. The internal guidance manuals also are used. They are produced by the same ZRI. The internal guidance manuals here, what happens is that the ZRA makes these manuals available to the public. And the other form of guidance that the ZRA give is of the press releases. Now, these provide details of a specific tax issue. For example, it is used to communicate the information stated in the annual budget. The ZRA also issues pamphlets. The pamphlets, what they do, they provide explanation of various tax issues in a non-technical language. You can even ask for these pamphlets. Taxation should be understood by everyone, all the citizens. Is there any question by anyone? Now, okay. Assuming that you are fine, then we can move on and look at the charge year, the concept of the charge year. So charge year is just a period, okay? A charge year is a period of 1 year for which tax is chargeable. Simple. A charge year is a period usually of 1 year for which tax is what? Is chargeable. In the context of Zambia, a charge year usually runs from 1st January to 31st December. Okay? So this is what happens. So the ZRA usually has got a lot of responsibilities. Yeah. And some of the responsibilities that the authority has to, number one, properly assess and collect taxes and duties at the right time without causing undue burden to the public. The ZRA encourages the public to present themselves and pay tax voluntarily. And it ensures that all the monies are collected, okay, and are properly accounted for and timely banked. The ZRA enforces all relevant statutory provisions, and actually it gives advice to the minister on aspects of tax policy. The ZRA facilitates international trade. So the ZRA is very important in this case. It is extremely important. As we draw closer to the conclusion of this study, let me talk about the issues of tax evasion and avoidance. Very important. For tax evasion is just any action taken to evade or to dodge taxes by illegal means. You are dodging taxes by illegal means. For example, you suppress information. This is where you fail to declare taxable income to the revenue authority so that you do not pay the tax due. You can provide false information as well. Now, when you provide false information, this is where you claim expenses that have not occurred so that you reduce the tax liability payable. Now, you should know that tax evasion carries a risk of fines, even imprisonment sometimes. So please don't evade taxes. Tax avoidance. We want you to understand the difference. Tax avoidance is a legal method of reducing your tax burden by, for example, taking advantage of making best use of available allowances, available exemptions, and reliefs. So the term is also used to describe tax schemes that you utilize loopholes in the tax legislation. So this one is by legal means, okay? That's tax avoidance. Can avoid taxes. It's still okay to avoid taxes, unlike to evade taxes. At your own disposal time, we ask you to explain the qualities of a good tax system that we have already discussed. List the functions of taxation in the economy. That is what we have discussed. And what are the main types of taxes in Zambia? Okay. The classification of taxes. You should be able to list the functions of ZRA. And this is very important. Is there any question? All right. So let's see what happens next time. Now we pick a question, a practical exam question, then we go through and understand these concepts. I wish you well.